Just waking up here. Hello, hello, hello. No, the intro was just going on. I just got to my desk now. I just started the stream a few minutes ago. What's going on, everybody? Good morning, good evening, good night, depending where you are in the world. What's going on in the chat today? Let me pull up the YouTube chat. Let me pull up the YouTube audience. How's everybody doing? Good morning. Raja's waiting for you. You lied to Raja? I didn't lie to Raja. Raja and I are friends. Friends don't lie to each other. You know what happened? What are you guys talking about? Hopefully everybody can hear me. Could I get a quick audio and visual check? You should see gold on your screen right now. I'm going to be taking my time going through some analysis and trade ideas for scalping style trade ideas on gold, GJ, GBP USD, Euro USD, USD CAD. Oh, I told Raja I'll come on his stream this week, but I was half asleep in bed. Maybe I told him today by accident, but we were just talking. I told him I'll come on your stream this week for sure as a guest, but maybe I accidentally said today. Shit, that's my fault. Apologies to Raja Banks. What? Raja doesn't give a shit, man. This guy has more viewers right now than a freaking morning show on TV. This guy get more viewers than CNBC. He's fine. Raja's fine. Raja's doing great. But I am gonna come on Raja's stream this week for sure through Zoom. Yes. Okay, everybody. It seems like the audio and visual is very good. So let's just jump into the meat and potatoes of marking out some analysis and trade ideas. Then through the New York and North American session overall, we will be looking to execute on those scalp ideas together. Okay. So right now, for those of you who are new here, take a second to read through the YouTube description. But basically, for those who are new, I go through this process of talking about the current fundamentals impacting the market, the economic events we have on the docket to focus on, market sentiment in terms of investor behavior, and of course, then the technicals and price points of interest to execute trade ideas on. I go in this order. I'll go through the fundamentals, market sentiment, economic events. Then I'll go through analysis in this order on gold, GJ, GBP USD, Euro USD, USD CAD, and the US 30 stock market index. Okay. Some of you, most of you probably already know me. You know what I mean? It's usually the same crowd. If Raja's streaming right now, we're probably only gonna get a couple hundred viewers anyways, but nonetheless, who was able to watch the Monday market update webinar I did on Monday, of course, where we were talking about the weakness in Japanese yen, the weakness in dollar, playing some gold buys, playing GJ buys, GBP USD buys, and so forth. We've already had some nice trade ideas play out from that webinar. For those of you who have watched that webinar, we're pretty much going to be looking to extend that bias and sentiment. The current fundamentals at play are very, very, very similar. Okay, so a lot of you may recognize these current recent fundamental points because it's the exact same. Nothing has really changed over the last couple of days since the Monday market update webinar, and we're still having lower volume and volatility overall, which I'll be talking about in a second. So fundamentally, central banks' rate decisions are priced in, and so far, global economic inflation is still high. As we've had all those central bank rate decisions and economic data from the previous week priced in, such as all the non-farm payrolls information and the labor market data for the US, PMI figures from countries around the world. We had the FOMC the weeks prior. Then we had Bank of England, ECB last week. All of that has been priced in and digested, especially into the equity markets. And it still looks like equity market buyers are squeezing out as much as possible with the continued support of the central banks as they're transitioning into that hawkish tone, very slow and steady, and global inflation is still high. At that same time, to start off this new month, volume and volatility has been a bit lower and slower as smart money and the market makers are waiting for more economic data to unfold to see if that data is going to further complement the sentiment points given by the central banks, right? So with that being said, you can see that majority of global stock markets besides China here are still bullish on the higher time frames or ranging at their high points, showing that market optimism and investor confidence within their respected regions is still relatively high. We can see the US dollar individually here is relatively softer, and the Japanese yen is bearish, and the volatility index is bearish. So we're still trying to play this market sentiment today on US dollar weakness, Japanese yen weakness, and strength in the equities market. Okay? For those of you who have been following the Monday market update analysis that was posted on YouTube for free during Asian session, we called buys from 155.8, 156, 156.2, and you can see the beautiful rally we have had since that update webinar. Our dollar pairs have been a bit softer and ranging, but nonetheless, we've still had the buys from 1.35 on GU and the breakout of the consolidation zone and medium term zone with the retest at 1.354. We're still having some potential upside coming back into play on Euro USD after having this pullback. I would have liked the full retest to 1.385 for the buys, but we were just shy 10 pips. And we're looking for the UCAD sells below 1.27, 1.26. And we called the US 30 buys from 35K and 35,200. I'm just quickly reviewing, and of course, we called gold buys from 1820 up to 1828. I'm just quickly reviewing the trade ideas that we're giving in the Monday market update webinar, because through this session, we are looking to pretty much continue on that same bias, meaning GBP USD buys, Euro USD buys, USD CAD sells, US 30 stock market buys, GJ buys, and gold I'll talk about individually in a second here. Okay? So before we jump into the individual analysis, breaking down the market structure, price action, fundamentals, and so forth, and then laying out trade ideas, we of course, as manual retail traders, want to have an understanding of what's going on in terms of economic events. For us, volume and volatility, there's a high probability it may be slow during the New York session as we don't have any economic data going on. We had some Eurozone data through the London session at 2 a.m. Eastern and 4 a.m. Eastern from Germany and Italy, but through our New York session, we don't have much. We have this medium-term report for some wholesale inventory reporting, but again, that's at 10 a.m. Eastern, very minimal impact there. So in terms of economic events, today there's not much to focus on. Tomorrow during New York is where we'll get a lot stronger volume and volatility, as we're going to be getting inflation figures data with CPI. So I'm expecting a lot stronger volume and volatility, especially on gold and the US dollar tomorrow, with the expectations of this inflation still being high. With the expectations of inflation still being high, I'm expecting gold to still go bullish tomorrow and US dollar to be a bit more bearish. But that's talking about tomorrow. In terms of today, not much to focus on in terms of economic events. We're just going to be following the order flow movement, market structure, and analyzing the price action accordingly alongside market sentiment. Oh, do some of you want the headlines on the screen? I didn't know if people wanted them or not. I got no problem. I can put the headlines on the screen for you guys. Just in case we get some reactive news. Sure. I took it off because I reset my PC. One sec. Not reset, sorry. Restarted my PC and it was just gone from that area. I'll put them on right now. Give me 1 second here. Okay. I know some of you guys like these news headlines. Just in case, and it's great to see the news headlines just in case we get something very important. You know what I mean? We'll just plop that over here. So in terms of economic events itself, not much going on, but always we'll be keeping an eye out on some of these fundamental headlines here, just in case we get some reactive news headlines to digest, understand, and potentially trade. Okay, now let's jump into the analysis. So, with gold here, and I talked about this in the Monday market update webinar, we drove down to this very specific higher time frame buyer demand zone, where every time we've come to this demand zone, regardless the fundamental catalyst, we fail to break, sellers exit out, and we have a significant rally from this area back up to its previous highs, as inflation is still high, a dollar in the short term is weak. There's expectations of higher inflation readings tomorrow when we're looking at the US data, and a lot of the Fed interest rate decision has been priced in. So the previous weeks during the Fed interest rate decision, when the Federal Reserve was more hawkish, we saw that bring US dollar strength and lead to a drop in gold, as talks about interest rate hikes and combating inflation and the Federal Reserve having a more hawkish tone, those are all bearish factors for gold. That was a great move for that weekly period as we drove down from 1840s all the way down to 1790s. But what's very interesting is even with that fundamental catalyst of a more hawkish Federal Reserve, we still came to that very specific higher time frame demand zone and failed to break. You can see the week after the FOMC, we had some pullback structure and we drove down to these lows again, failing to break as sellers took their profit after having a pullback for the new week here. Buyers jumped in and we still failed to break 1790s. After that, you can see we drove down to these lows again, failing to break, where for those of you who remember, this was NFP. Non-farm payroll was good, but unemployment data was bad. Sellers made their money here on the intraday time frames, both days, but not enough volume or volatility to break below this price sensitivity area, a very strong buyer demand zone, and tons of buy orders collected in this area. Ever since then, we have been playing the bullish market structure in buys above 1810s, scaling up accordingly. So I'm still looking to play primarily the bullish bias, especially tomorrow with the expectations of a higher consumer price index data. But there is something we have to notice with how gold has been trending bullish overall here. Anytime a significant intraday higher high is printed, you can see you enter some type of pullback or corrective phase. This pullback or corrective phase can be a consolidation zone before getting the breakout to the upside and continuing with the trend, right? This bullish corrective phase can be a pullback period, whether it's a slow and steady pullback like this, a very aggressive pullbacks like you see here, a slow and steady pullback here. But what you have happen is these pullback phases or corrective phases take place, a pullback to a more favorable demand zone before continuing up with the overall trend. So what we're seeing now on gold is at a new intraday high printed, we're starting to enter a potential order block and consolidation zone. We're starting to slow down in terms of the buyer's volume and buyer's pressure so far after printing a new intraday phase. What seems very high probability on gold is either we can continue to consolidate up until we have more volume from a fundamental catalyst, whether it's a reactive headline that can obviously you'll see to the left of your screen, or it's an economic event like inflation data tomorrow, or we can see gold like this situation, if it breaks below this consolidation zone, potentially enter a pullback phase to collect more buy orders to continue back up for inflation data tomorrow. Does that make sense for everybody? So basically, yes, I'm on a bullish bias on gold, especially with the current dollar weakness, especially with the current structure, the fundamentals from the previous weeks of the Fed interest rate being priced in, buyers consistently printing intraday higher highs. But as manual retail traders, we don't want to get trapped or jump in the buys when gold is doing a pullback, where these pullbacks can be impulsive and can be 50 pips or hundreds of pips. We want to stay adaptive accordingly. So we can see from the previous weeks, we had a nice bullish rally, a pullback, a nice bullish rally again. And at these new intraday highs, we can see this 20 pip consolidation phase we are in, from about 28 to the 26-ish, 25 lows there. Okay, so now, as we're expecting lower volume and volatility today because there's no economic events on the docket, a lot of the previous events have been priced in, we're just going to be looking and marking off this order block and consolidation zone, with the lows of the consolidation zone being at 1825.5 and the highs of the order block being at 1828. Because we can have one of two things happen. We could have a new high printed. I'm just going to label that as this blue circle, just like here, new highs printed, right? Then you can start to enter a consolidation phase. You break to the downside of the consolidation and you do have that bit of a pullback, where this, even though it wasn't huge, it wasn't as large as these previous pullbacks we saw to the left, you can see it still is 50, 60 pip pullback. If you're trying to buy as this pullback's happening, you don't want to deal with that drawdown or get your stop loss ripped out. You could adapt to the sells below that order block, then jump back into the buyer bias when the buys are back in play and you break above 1820 or you break above the previous highs, right? But just because we're consolidating right now and creating this bit of a resistance and having this exhaustion by buyers doesn't mean we have to have a pullback take place. You could easily have a consolidation phase and a breakout to the upside. Let me show you examples of that. For example, here you have your bulls in play, but then for a couple of days or a couple of sessions, you consolidate. You don't break to the downside of the consolidation. You actually have a break to the upside after having more buy orders collected. You take the break to the upside trade. Then you even get a retest of that order block before continuing up again, right? Another example of a consolidation and continuation play is something like this at 1812. You already had a very aggressive pullback play at these highs printed. Buy orders collected from 1795s and 1800s. But as you approach that previous high, you enter a bit of a consolidation phase. You don't break to the downside of the consolidation. You break and retest to the upside and then continue your way back up and then retest there before continuing up again. Right? So what I'm trying to identify now based on this consolidation zone for trade ideas is very, very simple with the current volume and volatility. Consolidation zone, order block. If we break below 1825s, what that shows me is more exhaustion by buyers and buyers exiting from these highs. It also shows me not enough volume to break above these highs. I would take sells below 1825 to retest better buys at 1820s before continuing up again. Or if we just consolidate here, but then break above 1828, then we're just playing the continuation buys. Okay? And we're looking to scalp this. Okay? So remember, the interest rate decision, all that downside on gold has been priced in. Very strong bounce from that 1790s demand zone. Intraday bullish market structure. Expectations of higher inflation tomorrow. We're just consolidating at these intraday highs. We would only play some pullback sells if we break below that consolidation zone at 1825. And those would be some short-term sells to revisit better buy areas. Otherwise, if we just consolidate and break above 1828, which is the higher time frame key level, the consolidation zone highs, and the last intraday high printed, then we're just looking to continue the buyer's momentum, continue the trend, and take those buys above 1828. Okay? Which we might get shortly coming up. So does everybody understand that analysis for gold before I jump onto GJ? Let me know in the chats if you guys got any questions about gold before I jump into GJ. You don't expect gold to visit 1780s again? Why? Do you think gold is at a daily level? Like, what do you mean? Yeah, if we hold above 18, like if this hourly candle closes bullish here, the next hourly candle makes a lower wick, the buys from 1828 with New York open to at least get 20-30 pips to revisit 1832 looks pretty favorable. We're just gonna wait, but we're just waiting because New York open just in a couple minutes here. So it'd be great to have this candle close bullish above 1828 here, But right now we're just in that same consolidation zone. So New York just opened up. It's pushing a bit up first, but there's no lower wick created at all right now. So it might give that quick squeeze, but there's no lower wick created at all right now. Oh! Sorry, I don't want to scalp that quick. Hey, nice quick impulsive play. No lower wick there though. Yeah, I caught that quick. Yes. I closed it for the up to 1830 there. Yeah, 1828. I have two accounts. Yeah. Holy, ease. Damn, that shit exploded. No, I closed it. I closed that one. I had a sell last night that I tried that I took a 10 pip loss on. And then that buy I just took with all of you. But I closed that buy for only about like 15, 20 pips. It's still going, man. This bitch still going. Yeah. So I'll take that 1600 for today. You know what I mean? That's good enough for me if you guys want to see it. The entry was right at 1828, like I told you guys. You can see it here. The entry was right at 1828. So the reason why I entered was because gold is bullish and it looked like it was creating a bullish order block as we failed to break these lows, right? I already had the buy stop at 1828 that got activated there. My stop loss was below these lows. So it's like, it's not like I was expecting, like regardless, I was expecting like if we get a lower wick, we're still gonna continue up bullish anyways. The fact that it pushed up so aggressive now instantly is just a bonus. You know what I mean? See, look, CH members caught the same trade. This guy, he caught more, Ash caught more pips than me. Private channel members already have trade ideas last night anyways, so you know what I mean? No, I'm done for the day there. I'm trying to build 2 accounts right now. I took the same trade on both. This one's a smaller account. So I made about 1,000 plus this. 1640. This one's a larger account, the other one's a smaller account. All right, everybody. So anyways, gold buy idea played out. If we get retest, we'll look at it again. This hourly candle has no lower wick, so it could easily come and flip bearish and make that wick at some point. But anyways, can't go wrong with that. Yeah, who was able to catch those gold buys? Pretty textbook. Look at the 1-minute price action as well. The breakout candles, minor retests. Great impulsive play, level to level. Textbook, break above. It's pretty textbook. All right, so now that we um, now that we understood the gold analysis, if we get retests on gold, we'll look for some continuation buys. My SL was below, my SL was roughly 10 pips, just around 1827, 1826.7. But we're going to get that lower wick. We're going to get that lower wick anyways, most likely. For a lot of you who are saying that entry may have been too impulsive, I think you guys have to understand you're scalping, right? In my opinion, an impulsive entry is if you're taking a trade that you didn't pre-plan. Like if you're just looking at the chart and New York's about to open and you're like, oh, let me try a gold sell right now. Maybe New York open will spike down. You know what I mean? But I had a buy stop at the 1828s area. So it just so happened that it got activated right before New York. I already had the risk set, and in terms of what we are looking for as a scalp target, we said 1832. You're telling me this predetermined zone, the predetermined entry point, and the predetermined zone we just flew to, right? So I'm explaining that, right? You're telling me that this is just random, we just reacted there. Just went up that 40 pips and reacted there. You know? So the reason why it's not impulsive is, as a scalper, you have to understand you're playing very small time frames, very small pip ranges. This may be obviously common sense. Like you're like, yeah, no shit, Jeev, we fucking understand that. But trust me, listen to me very carefully. A lot of people neglect and ignore this. So many manual retail traders ignore the psychology behind scalp trading. They don't understand that you have to make your decisions extremely fast. Your decisions on taking an entry, your decision on trade managing, your decision on exiting out of the market, all of these decisions have to be made extremely quick, because you are scalping lower time frames and most likely looking to scalp. Right? I close because I'm running the Zoom. I don't really want to risk dealing with the aggressive pullback afterwards. You know what I mean? I gave 300 people the trade idea. All you guys had to do was click a button and sit there, scratching your ball sack. You know what I mean? So please understand that. A lot of people ignore this from a psychology. And also, if I didn't close and I was holding for the 40 pips and I was still talking right now, it would be back to where I closed anyways right now. So I'm running a stream for 380 people right now. I still took the entry. I still scalped 15, 20 pips. I still followed the same pre-planned analysis. But all I'm saying is, I'm not trying to offend anybody. You have to understand that it's different compared to the other trading styles. For example, with like an intraday trading style or like a swing trading style, there's a lot more time to make a decision because you're playing higher time frames. You're potentially looking to enter a trade for hours, or sorry, you're potentially looking to enter a trade where the confirms may take hours. You're potentially looking to hold the trade for hours or days, right? So you have a lot more time to make a decision of when you're going to enter, of when you're going to exit, of how you should trade manage. Maybe you should move your break even. Maybe you should move your stop loss and break even. You have that time to make the decision. As an intraday trader, you have more time. You have your hours, right? You have hours that you're potentially waiting for a setup to take place. Potentially waiting for price to come to a bigger area of interest. You have hours that can take place. You have larger ranges you're looking to play. You have a bit more breathing room for your stop loss and so forth. Right? So with scalping, the reason why so many manual retail traders scalp is because they only look at the positive side and the benefit of potentially fast moves in a short period of time. They see the fast, quick money. That's why Raja's trading session is so popular. If Raja switched his session to a swing trading session and he said, all right, we're going to be waiting the days for this to set up, it'd have a fraction of the views compared to the scalping session. Because people are greedy, they're impulsive, they fall victim to their pleasureful emotions. Right? So they only look at the positive side of scalping, which is the fast profits, very fast movements during a session, trying to catch 10, 20, 30 pips very quick. But they don't look at the flip side of how fast they need to make their decisions. So when people say as a scalper, oh, that entry was impulsive. Scalping is impulsive. The trading style of scalping itself is impulsive. You're literally having trades take place within minutes, especially on a beast like gold. Especially if you're trading gold during the North American trading session, you're trading GJ overnight as well. Some of these trades are playing out within minutes. The entire style of trading, scalping, is impulsive style. You're playing smaller time frames, right? Exactly what Burner said. People want the fast money and fast returns, but they forget about the faster losses as well. And now, please listen to what I'm saying very carefully. It's much easier to get emotional when you're scalping. Okay? Because remember, you're making decisions very fast. When you take a loss very fast, what do you think is the first trigger in your brain when you're scalping? Do you think logic comes into play? Or do you think it's emotion? Because everything is impulsive. What comes into play is emotion. All right? Scalping is not gambling. Scalping is lower time frame trading. Scalping requires just as much discipline, planning, and understanding of timing to be successful. First of all, I closed my 15 pips, 20 pips. Some of you didn't even take a fucking entry. I made some money for today. More than most people will make in a month. And I made that money within 3 seconds. I have a perfect understanding with my experience in the markets of appreciating every dollar and staying adaptive to the market timing. I know as a scalper, if I get 10, 15, 20, 30 pips, I'm taking some profit off the market. I'm closing. And I'm going to come attack another day because that is the style of trading. It's scalping. Do you understand what I'm saying? So when people say, so there's a few psychological tips I want to give you. Number one, having FOMO while scalping is probably the most retarded ideology ever. Having fear of missing out while being a scalper is some absolute childish retard shit when the market's moving around the clock. You just missed out on something with the group. You know what I mean? Like, there's no missing out on scalping. What are you missing out on? The market's moving when you're here, when you're not here, when you're dead, when you're alive, the market's moving. And as a scalper, you're looking to play smaller time frames. You're looking to play sessions where there's sessions every single day, same sessions. Right? Number two, you have to train your brain to make logical decisions in very short periods of time. That means when you're entering, trade managing, exiting a position, all of these decisions have to be made very quickly. For example, if you scalped gold, and let's just say you did hold fully to 1832, but you didn't take your profit out of the market, well, a simple 5 minutes later, which can be somebody going to the washroom, more than half your profit's gone as a scalper there. Even more than half your profit's gone as a scalper there now. Scalping is very time sensitive. Okay? Number 3. Majority of people in society nowadays have very low patience, very short attention spans, and are extremely, extremely hypersensitive. When you lose money while scalping, there's a 99% chance the decisions that come after are emotional. When you lose a trade swing trading or intraday trading, most of the time, you're not really looking to enter again because the trade has already taken place. The entry is already gone, or the trade is invalidated. But with a scalp, you could enter right after you lose and see if you start to get back in profit. With a scalp, you could go quickly say, okay, I lost on gold right now. Let me go try to jump in something on GJ quick. Do you understand what I'm saying? So the psychology with scalping, especially in the modern society where people's attention span is in the gutter, they have no patience at all, they're hypersensitive to everything and anything. Imagine what happens when they start to deal with losing money in seconds. And people are losing money that they may work a week for, they may work a month for, and they lose it in a minute trading gold. How do you think that's going to fuck with their brain? Anyways, everybody, so just those psychology reminders. As a scalper, you're playing short time frames. You have to make fast decisions. You are dealing with these money markets on the shorter time frames. You still need the same discipline of having pre-planned analysis. This gold buy, if you caught it or didn't catch it, if I caught 15 pips of it or the 40 pips of it, it wasn't random. We had our pre-planned analysis. We knew if we broke above 1828, we were just looking for continuation buys. You can rewind the stream before the move played out. Right? But at the same time, we also understand we can't get greedy. We're only looking for scalping ranges, scalping time frames. I took that trade with like a 10 lot. If you took that trade with a 1 lot, and you held it for 30, 40 pips, that's $300 or $400 within 2 minutes. I don't know how unappreciative people may be. I don't know how out of touch with reality people may be, but there's family members who are going to work in a factory for 8 hours, 12 hours doing grueling labor who won't even make $100 in the day. With some pre-planned analysis, group trading right now, a simple 0.5 lot or 1 lot at 1828, catching 20 to 30 pips, you can go, right? No, I had a buy stop at 1828. Whether a wick formed or not, I was going to be in the trade with the risk predetermined as we were in a bullish consolidation zone and did not break to the lows. And then it just happened to... First of all, if the buy stop didn't activate before New York Open, if New York Open made a liquidity grab first, then started to push up, that buy stop would have activated then. If it activated right there and NY pushed down first and then pushed back up to into 1832, it would have been the same exact trade still. Same exact entry, same exact analysis, same exact risk metrics of what makes the trade invalid. The entry was literally 1 pip at 1828. At the end of the day, right? I don't control the movement of the market. You guys are mad at me that you missed the trade and then gold happened to push up 40 pips in a couple of minutes. That's not, I don't control that. I would, even if gold just started to push up slowly at 20 and went 20 pips, I would have closed the same position. You know what I mean? Yeah, I would have closed. Yeah. Even if gold didn't do this impulse, like I closed at 15, 20 pips. I didn't like hold it and expect this huge squeeze. I don't freaking press the buttons in the market. You know what I mean? You guys are acting like I'm the one who didn't let you enter gold and then pushed it 40 pips and I'm going, ah ha ha ha. Like it's not, I'm not the one doing that. Like it's the market. You think I'm the one who just entered and pushed the price up? I wish. All right, everybody. So that's gold. We're going to be looking for continuation moves on gold the following 30-minute candle, okay? Which is going to be retest at 1828 buys. Is everybody listening to me right now? Then don't cry if you missed this one. New 30-minute. If we get a 1828 retest, or if we break above 1832, breakout or break and retest buys. Okay? This is the next setups to wait for on gold. Continuation moves. It looks like investors are already starting to price in the expectations of high inflation tomorrow. Okay? So now, one more time. Don't say like, oh, you said this, you said that. If we come back to 1828 and don't break, we might dig a little bit lower, but hold above. Retest buys. New 30-minute candle makes a lower wick or just holds above 1832. Continuation buys as a scalper. Okay. Next we're going to GJ now. So everybody remember, a lot of the fundamentals from previous weeks have been priced in. Okay? Market sentiment wise, equities are still hot. UK equities are ranging at their highs, which is showing us investor confidence within the British pound. And the Japanese yen is still bearish when we come look at that individually here. Japanese yen bearish, volatility index bearish, dollars relatively soft and bearish. When we come look at our equity markets, this is the UK equity market here, FTSE 100, still relatively bullish. GJ, if you guys have been following the Monday market update webinar, we've been calling GJ buys from 155.6 scaling 155.5 scaling up accordingly with that yen weakness, hawkish Bank of England we had from the prior week, which brought some more strength to the British pound. Okay, weakness in JPY when we're looking at the structure and sentiment, confidence in the UK equities and stock market, bullish intraday structure on GJ. What I'd be looking for on GJ in the next 30-minute period and 4-hour candle is pullbacks to 156.5 buys, breaks above 156.800 buys. I still see us trending to the previous intraday highs here to the left, which is 157.5 on the higher time frames. Over the course of the next few days and next week, regardless of some of the market waves, I see us making our way up to these previous price points. Yeah. Good job. Yeah, we're playing the bullish bias on GJ. On the 1 minute time frame, lower time frame here. I'm going to be waiting for either the 0.500 retest buys or the break above 0.800 buys on GJ. GBP USD. If you guys have been following along the Monday market update webinar, ever since dollar turned a bit more bearish as the Fed interest rate decision from the prior weeks was priced in and US economic data has been weaker, as well as we had a more hawkish Bank of England, we've been holding some more strength, and we called buys on the Monday webinar that was uploaded for free on YouTube at 1.35, and the breaks above this consolidation. The fuck is that? And the breaks above 1.354 for the continuation moves. Now we can see as dollar's a bit softer, we're still looking to play that same sentiment. We had some nice buys overnight from our 1.354 area. I'm going to be looking for the retest here and still looking to target 1.365 and also the buys from 1.36 continuing to the upside. Okay? Remember, no economic data until tomorrow, really. And even with tomorrow's data, when you're looking at the US dollar here, we're still expecting dollar to be weaker with the expectations of higher inflation figures on the monthly and on the yearly CPI. Okay, just because the Feds and central banks have been talking about increasing rates and have been talking about combating inflation doesn't mean they've actually taken any action yet. So we can see why equity market buyers are still trying to squeeze out as much as they possibly can. How long till you get accepted into Capital Hungry? You paid? How did you pay? The sign up should be closed this week. But if you got in still, then you can just message, just follow the instructions, and you should be getting added to the chats and services to get access to all the tools, resources, and information today. But signups should be closed, so maybe Krish didn't close it yet. I'll get her to do that today. Because in Capital Hungry private channel, we're almost at 400. We're at 400 plus members, so. No. Yeah, I thought Krish already closed the signups. No, it's not the wrong website. If it's capitalhungry.com, you're good. That's the website, right? You signed up at capitalhungry.com, because there are a few scammers right now that are making fake profiles of Capital Hungry and having people and scamming people pretending to be me. You know what I mean? Okay, bro, relax. Okay, new 30-minute candles here on gold. If we get those retests of 1828 or breaks above 1832, it's going to be some nice continuation moves. That last 30-minute candle, we can see close bullish now without an upper wick. Yeah, don't worry. Don't worry. If there's ever any issues with you paying me, I guarantee we will refund you or reimburse you or make sure it is handled. Capital Hungry is a professional business market research and analysis service in the retail community space for multiple years now. Since 2019, 3 years now. Yeah, most like we'll get the retest of 28 or consolidate on the 1 minute, breakout 32 buys. Yeah. Okay, so GU, Euro USD. Euro USD here. Yeah, you got to message Krish. Euro USD here, you can see last week we had a more hawkish Euro central bank. This led to this huge upside burst in price, the same time that the US dollar has been a bit weaker in the short term as the Fed interest rate information has been priced in. As we printed these new intraday highs and have the potential opportunity for some more upside on that dollar weakness and hawkish tone by the Euro Central Bank, you can see to start out the new week, we're just creating some bullish, bearish, corrective structure. This pullback, bearish, corrective structure. My ass said pullish. You know what I mean? So you can, oh, a fire alarm going off my house. One sec, let me check this fire alarm out to make sure it's not a real fire. BRB, 1 minute. Never mind, girls just cooking. Can't cook worse shit. I'm the better chef, 100%. I'm the better chef. I'm the best cook. Okay. Anyways, we're good. We're good. Just a little bit of smokiness. So we can see we had this pullback occur, starting to create a bit of a support now. And overall, we're still more bullish on Euro USD as we have more hawkish Euro Central Bank and weaker US dollar at the moment. If we hold above 1.42s and 1.41 area here, I do see us making the upside move to revisit these highs at 1.148 and having more buy orders entering the market to revisit that price point. Now, if you followed the Monday market update webinar, you would know I was looking for the buys off 1.385. Sadly, we just missed that area by 5 to 10 pips. So we started to create a support just a bit shy of the key level entry area, but that's okay. So on Euro USD today, if we can break above 1.1444, I'd be looking to take the buy scalps and catching this range about 30 to 40 pips to the upside here. I'm not looking for any Euro USD sells. Even if we dropped, I wouldn't sell. I would still be looking for buys in these areas. My favorite pair, I would say probably gold and GJ. Gold's not really a currency pair. It's a precious metal safe haven, but like, you know what I mean? A lot of retail traders, including myself, trade it. Now, USD CAD has been more indecisive in ranging on the intraday timeframes as we have this tug of war of a short-term weakness battle between the US dollar and the Canadian dollar. For those of you who don't know, there are very strong ties and correlation between the Canadian dollar and, of course, crude oil. As crude oil has been a lot more bullish and trending bullish, this has kept some strength for the Canadian dollar and had us have some of these more aggressive downside moves after rejecting the previous highs. But as oil peaked around $93, $94 a barrel, we can see that it starts to enter some pullback structure, and both oil and the US dollar have been short-term bearish, creating some more messy, sporadic price action on the intraday timeframes. But overall, I still see oil as bullish and Canadian dollar stronger than the dollar at this moment, and potentials for us to go to 1.266 and break below 1.266. Too many people in my chat? You should see the gulag. The capital hungry YouTube audience is pretty tame. We're the aristocrats of the YouTube community. we're We're the what's it called? I don't even know. Never mind. Fuck it. We're the scholars. We're the scholars of the YouTube community. Gulag's just non-stop, like buy, sell, buy, sell, GJ, GU, dollar, up, down. So it's crazy, you know? It's nuts. It's a lot of excitement. It keeps you awake though, for sure. Keeps you awake, keeps your energy levels up, but it's a lot of noise too. GJ, we're waiting for the breaks above 0.800. Then we're going to start to take some buy scalps to target 157. Gulag is the best. When does the 1 hour candle close? Are you asking me as a question? Closes every 1 hour. US 30. Remember, dollar short-term weakness, equities holding a lot more strength. Buyers are trying to take as much as they possibly can out of the equity markets before the inevitable rate hikes. Okay? For US 30, we were calling some nice buys from 34,600, 35K, and 35,200. No, Raja's IQ is very high. Raja's a smart guy. You got to be smart to do the things he does. It's just his YouTube audience is very large. Okay, Raja's YouTube audience is not a representation of Raja or what he teaches or shows, or his IQ or his knowledge or information. Over the years, as Raja's been involved in the retail trading space since like 2016 now, he's been on YouTube since like 2018, right? He's developed a huge following and influence in the retail trading community. The retail trading community itself is a gulag. The whole retail trading community overall is a gulag. You know what I mean? So Raja's YouTube chat is just a small sample size of the entire of the entire retail trading community. It's just a sample size of that, but the statistics are the same of what makes up that community in YouTube chat. That's why it's called the gulag. You know what I mean? But that audience doesn't represent the value or information that Raja shares. That audience represents the retail trading community. You know what I mean? Yeah, just so people understand that. So, because Raja has a huge audience. He gets like 2,000 people that pull up. So out of that 2,000 people, 90% are gulaggers. You know? Yeah, on US 30, 35,400 retest buys, maintaining the bullish price action and market structure. 35,700 buys. All right. Okay, now people are asking a lot of questions about resources, learning, so forth. Capital. I'm gonna be answering questions as we wait for these trade ideas to set up. We'll watch gold as it's doing its pullback and retest now. So we're going to watch the price action if we can get any further scalps in a couple of minutes here. We're going to watch GJ as it starts to break above 0.800. If we can get some buy scalps on GJ. Okay. But before I jump into that, a lot of people are asking questions about fundamentals. Where can I learn this? Where can I learn that? Let me show you guys something, all right? This is the Capital Hungry YouTube page. There's no clickbait here. Don't worry. Gold's just doing a deeper pullback. It's not ready yet. I'll tell you guys when it's better to jump in and buy. GJ's just holding at 0.800. It's not ready yet. Calm yourself. Relax for a second. Okay? Look at the Capital Hungry YouTube page. Each of these rows has 6 webinars. Look at the amount of content on the Capital Hungry YouTube page. if you're telling me you don't know where to go learn, I'm sorry to say you are just lazy. You know what I mean? Okay? Now, amongst those webinars, live 1 minute analysis or news breakdowns for low attention span people. Monday market update webinars for trade ideas and analysis for through the week. Self-improvement videos, 1 minute breaking news, 1 minute analysis, Monday market update, live trading sessions, economic educational webinars, right? All of these over the last 2 years now. Live scalping sessions, intraday analysis, market update webinars, trade idea setups, psychology webinars, risk management, and so forth. I even called the crypto correction 4 months ago when it showed up now. Okay? Now, this may seem like it's very overwhelming. Hey, Jeev, this is so much shit. Where do I even begin, man? This is crazy. Go to the Capital Hungry YouTube page. On the top subheadings here, click playlists, and I divided it into playlists for you. All of the 1 minute breakdowns and news breakdowns, you can see it's a playlist right here. All of the self-development videos and videos about society and psychology, all 32 of them, playlist, just click it, start watching. All of the live trading streams to learn about scalping, London trading sessions, New York trading sessions, 70 of them. These all range from 2 hours to 4 hours long. Okay? All of the Monday market update webinars, 30 of them. All of the individual market analysis, 30 plus of them. All of the educational webinars, 20 plus of them. I guarantee you right now, I promise you right now, and I've said this a million times, you will learn more from my free YouTube than from a paid mentorship on Instagram. And if you want more than that, the Capital Hungry private channel will absolutely take you to the next level, guaranteed. Okay? Now, also on top of that is the Capital Hungry free Telegram analysis channel, where in that analysis channel, I share trades I've taken, like that gold buy scalp, or I share market updates, news updates, when I'm doing live streams, chart updates, and so forth. You also have the Capital Hungry News Twitter, Forex Factory, Forex Live. They source news headlines from the Capital Hungry Twitter here. The Capital Hungry News Twitter for free has posted 30,000 headlines. Now, this isn't as many headlines as the news terminal to the left. The news terminal to the left is for private channel members, where they get every single market headline every single minute. This sends every 10 headlines to the Twitter. Every 10 headlines that the private channel gets, one of them goes to the news Twitter. But even then, for free, you can still see 30,000 tweets and headlines posted over the course of the last year. Better than Forex Factory, better than Forex Live. Okay? So the YouTube page, all these playlists, the Capital Hungry Twitter, the Capital Hungry free Telegram analysis channel. I guarantee you'll learn more than any paid mentor. If you want more than that, you can join the private channel. But private channel signups are supposed to be closed. Every time the private channel hits 400 to 500 members, I close up the signups just because I want to make sure the environment stays productive and it doesn't become a huge distraction or filled with noise. We keep the focus on the charts, fundamentals, psychology, and so forth. Now, everybody, gold and GJ, they're starting to look a bit better, but We have 10 minutes until the new 4-hour candle. I would personally be waiting now that we've held we held gold, just the initial reaction of 10 pips. I would be waiting for the 4-hour candle to close, hold above 1828, because usually with the intraday candles, larger intraday candles like a 4-hour or daily candle, especially moving into New York Stock Exchange open, you can get deeper liquidity grabs. Okay. With GJ, we're holding some price action above 0.800, but more than likely, we're going to get a price setup with this new 4-hour candle and hourly candle coming in. Same trade idea still valid, and same trade ideas we're still waiting for. We're still looking to play that dollar weakness. EU still active as we're talking right now. USD CAD is still active with the sell so far below 1.27. Just been very messy price action. And we're going to be looking for the US 30 buys from 35,600 into NYSE. Yeah. Okay, now that I answered those macro questions, if anybody has some individual questions about something we're looking at right now, a potential trade idea, a chart you want to send, you can feel free to do that now. I wasn't reading the chat as much, but I'll read for GU, if we have these buys take place, I'm expecting us to at least revisit these intraday highs at 1.36100 and then also start to continue up higher to 1.365, playing the more bullish GBP from a hawkish Bank of England the prior week, and short-term weakness sentiment we're playing when we're looking at the dollar movement right now, as well as the Japanese yen movement. The reason why I took just the 15-20 pips on gold is because volume and volatility has been a lot lower and slower since the start of this new week. So especially as we're scalping, when we had that nice impulsive move and play, I took that piece of the pie with the pre-planned analysis, and also because I'm doing analysis and giving trade ideas to hundreds of people during the Zoom. I don't want to get too distracted and end up burning myself. Yeah, same trade ideas. We're just waiting for the new 4-hour candle. This 4-hour candle is closing back in the range now, potentially in the next 6 minutes, but we're still very bullish overall, where even if we still hold again, like I said, above this consolidation zone, we're on the start of the new 4-hour candle, we can still scalp some of the range fill and catch that same 20-30 pips to revisit these high points, right? It's like, for example, here, where you had this high printed, and then on this hourly candle here, it looks like you were going to break out and hold above. You end up actually closing back below the previous highs, but the following hourly candle still maintaining the bullish structure, just continue back up bullish, respecting the trend. So essentially, as long as we hold above that consolidation zone, as long as we still have that buyer volume and volatility, we could still chug bullish to the upside, holding above 1828. I would still only be looking for gold sells with the same analysis given, where the sells would only be below 1825 to potentially set up better risk versus reward buys. That was discussed in the start of the webinar. So far, the scalp was the gold buy scalp at the start of New York session. But we were already expecting this hourly candle to flip and make a lower wick at one point or another anyways, because it just pushed up. Yeah, the sell ideas that I gave were only this. The only way I'm selling gold would be a short-term sell, playing some pullbacks. that would still be going to set up better risk versus reward buys overall. Okay. Okay, we got to be cautious as we're watching GJ. We just have some Bank of England speaker right now. We'll see what he's talking about in terms of economic activity as well as interest rates and the impact it has on GJ and other GBP pairs. Yeah, we can clear this out of the way. People can read that again after if they want. They can always rewatch the stream. Yeah, we're just waiting for the new 4-hour candles. It's only, just have some patience. It's only 4 more minutes. It's not a big deal. Yeah, even if this 4-hour candle closes bearish but still closes above this area, it's still perfectly fine in my eyes. Right? Look how bearish this 4-hour candle closed, or hourly candle, and the next you still had the continuation retest to the upside. Now, we might have to be a bit more cautious about our GBPJPY buys right away to the new 4-hour candle, just because we have a Bank of England speaker right now, which is going to be impacting GBP pairs here. Let's just read what he's saying. Bank of England's Pill says financial markets have come to expect a lot of guidance from central banks on where interest rates are heading. No shit. You guys are the ones that dictate the interest rates. So that's an irrelevant comment. Noise, useless. Bank of England says, I'm not going to give any specific view. Fuck yourself. Useless. Bank of England says, as we move back to a more normal policy situation, natural for central banks to withdraw from detailed guidance. We already know that. Useless. Bank of England says financial markets have come to expect a lot of guidance. We already got that. Double headline. Useless. Okay, just a bunch of noise so far. These are all just empty headlines. Useless, useless, noise. Let's go see what other headlines we've had through New York session so far. Mexico economy. Dubai lifting COVID-related restrictions. Saudi Arabia. Bungie. Oh, I thought that was Bungie, the game company, because, you know, Sony bought Bungie. You guys hear about that? Or you guys heard Microsoft bought, like, fucking, what's it called? What's that game studio called Microsoft bought? And then the next week, Sony came and bought Bungie. The people that make World of Warcraft and shit, Blizzard Studios. Activision and Blizzard, or is it both? Or they won? I thought they bought Blizzard too. Is Activision Blizzard? Oh, Activision and Blizzard are one? Oh, okay. So, but Microsoft bought them, right? No, I'm only switching into gold sells below 1825 as per pre-planned analysis. Okay? Yes, we're having a pretty large rejection here, but it's not like we haven't seen some bearish 4-hour candles before. This is how the market trends. You know what I mean? If we enter a bigger pullback phase like these situations here, I'll sell below 1825. Does that make sense to everybody? So we'll adapt to a gold sell bias below that 1825 area. So new 4-hour candle. Last 4 hour ended up closing a bit more bearish, but we're still in that same consolidation zone for the time being. If we just create a lower wick, fail to break, and then come back to 1828, we're taking the exact same buy scalp again. The exact same buy scalp again. Okay? I'm only switching out of that buyer bias and expecting a deeper pullback on gold if we break below the consolidation zone being created here at the new intraday highs being printed. Meaning I would need to see on the lower time frame and intraday time frame this type of price action. Break below. Then I can take the potential deeper pullback sell. Look right now, it still didn't break below. It looked very bearish, but look at gold right now. Still in that same zone. Grab some more liquidity. If it comes back above 1828, we can easily get another 20 pip scalp. But right now, we're in a no trade zone here. This is actually very easy for us as scalp traders, because now, you know, if it breaks below 1828, we can play that pullback sell accordingly. Or if we break back above, break and retest back above the order block, we can play the buy move accordingly easily. Here, no trade zone. Okay? Yeah, I will also jump in the sell with all of you if we break below 1825.5. Maybe even you could even put a sell stop right here at 1825-ish flat, 1825.2-ish. You want to make sure it's a safe clear. 1825 flat. Because if we were to break this consolidation zone, most likely it's going to be an impulsive break. You'll get a quick burst, 20, 30 pips, and then a possible retest. But what we're observing right now is that we're seeing this bit of exhaustion against a higher time frame bullish trend. So just because you're seeing a consolidation phase doesn't mean you have to break to the downside and get the pullback. You could easily consolidate and just break to the upside and continue bullish. You don't have to break to the downside. Yeah, exactly. Yeah, it looks like if this 4-hour candle was just making an upper wick and it flips bearish right now and we start to break below 1825.5 and 1825, then we'll get these scalp sells there, all right? And if it does drop, I'm expecting at least to come to this area if it does start to break on the 1 minute and hold below. Okay? Yeah, it's just grabbing some liquidity there. But no clean break just yet. Okay, GJ, we didn't hold above 0.800. New hourly and 4-hour candle. Looking like it's grabbing some liquidity to the downside first. We're still looking for buys at 156.5 and above 156.800. Okay? So no clean break just yet. The 1 minute closed right on a dime at those lows, you can see. No clean break below 1825 just yet. Yeah, if this 1 minute candle now, or we get bearish closures below these lows, then we can expect us to play the range trade down. Otherwise, no entries unless we break below the range. It's gonna just end up bouncing back up to 1828. Okay, the GJ, we're gonna let it do its pullback and either take buys from 0.500 or the buys above 156.8 after we get some more volume into play here, if we get some more volume into play here. GBP USD now and dollar pairs are just ranging over the last course of a few hours here, so it doesn't look like we're going to be able to squeeze much out of the dollar pairs here. And US 30, we're trying to take buys from 35,650. Oh yeah, sorry, I was reading some of the crypto headlines. Bitcoin been rebounding a little bit. Yeah, most likely US 30 will come very close back up to testing the all-time highs again. In my opinion anyways, yes. No, we're only jumping back in gold buys above 1828. If this new 4-hour candle is just grabbing some liquidity to the downside, we break above 1828, then we're jumping back into the gold buys. And we're only selling below 25. Right now, we're just in that consolidation zone. Okay? Yeah, gold's still showing that buyer's momentum. It's just in that consolidation zone. If it pops back above 1828, we'll jump in the same buy scalp, but right now it's just that new 4-hour candle setting up, ranging for the time being. Because the Fed being more hawkish from the previous week has been priced in. The Fed being more hawkish doesn't benefit the stock market buyers or the smart money investors, right? It takes away from them. So the Fed being hawkish, that tone has been priced in, but they haven't actually taken any action yet with interest rate hikes or combating inflation. So equity markets are trying to squeeze out as much as they possibly can before those inevitable rate hikes and inflation starts to get combated and comes down again. So we've been playing this market sentiment of some bears on the dollar, bears on Japanese yen short term, and strength on equities, gold, and other asset classes that are bullish on inflation. Yeah, if gold, see how we didn't break that low. That's why I was telling you I wasn't as much of in a sell bias. It was just that 4 hour grabbing liquidity. If we break back above 1828, we'll jump in the buys. And GJ, we're just grabbing some liquidity setting up here. Nothing too crazy going on. Pretty slow day overall. Pretty slow day. Yeah, no hold above 1828. Just rejected there. Obviously, you're not going to enter a buy on the wick. Yeah, the New York volume is for sure a lot slower than previous sessions. This week is slow overall. Yeah, I think in the coming weeks, moving towards March, if you have stock market investments, I did that personally. When we peaked the highs, I cashed out all of my stock market investments and just left cash on the side. But that's just me personally. Yeah, because of the inevitable interest rate hikes, which will cause a bit of a bearish corrective market on equities, and then I'll jump in after the dip. Was your portfolio good though? I don't know, what does that mean? Yeah, NYSE should bring some heat, but at least we got that nice gold move prior. We'll see if we get any continuation moves, but not looking like it so far. GJ starting to slow down a bit. Dollar pair starting to slow down in range. No, I'm going to be ending the stream shortly, probably like 10-15 minutes. No, I just caught that gold buy. I sent it to the chat. I showed you guys the terminal, live terminal. Same trade we called out live. 1828 buys. They played out at the start of the stream there. at New York Open. And everything else, we haven't really had any clean setups to execute on anything else yet. Dollar's just been very rangy. Equity markets are a bit slower. Gold just had some of that nice movement, and even that move got corrected and was very short-lived. And when you're looking at gold overall, it's still just in this range. You know what I mean? So yeah. All right, everybody. Thanks for attending. I appreciate the support. We're going to call it a day here. Make sure you guys rewatch this, as tons of analysis, trade ideas, information, and lessons about trading given. If you guys enjoy these streams and want them more often, make sure to send a like. Continue to follow the Monday market update webinar as well as the analysis given in this webinar, because the trade ideas are still active. It's just the volume and volatility is lower and slower, but we should get some more volatility later in this week, especially with CPI and the UK data end of the week.